So the JSE is weaker today, with its global peers mixed as investors await the U.S. March inflation data due out later. The local all-share index fell over 1%, its lowest since March 16th. To help us dissect the latest market developments, we're joined, as ever, by Karl Gevers, portfolio manager and co-founder at Benguela Global Fund Managers. Karl, always good to see you. So give us a sense first of how the markets are performing in intraday trade.
Yeah, good afternoon. As you mentioned, the all share down, following global markets that are under pressure and remain on tender hooks, waiting mainly today for the US CPI numbers that will give an indication of where inflation, global inflation is heading, which is big driver is the US inflation number. Given that the central bank tightening and monetary policies are very much linked to the inflation number, so a higher than expected inflation number could start a fresh round of jitters. However, for now the markets are, as you said, down, and the rand is holding its own. It is actually 0.5% stronger at 14.56 rand to the dollar. Oil and base metals are slightly off their recent weakest levels, while precious metals are slightly weaker and a bit of pressure today.
And the South African Reserve Bank is expected to release its biannual monetary policy review. What inflation outlook and monetary policy clues do you think we can expect there?
Yeah, so I mean the main thing, as I mentioned already, is what central banks are looking at is the inflation number. So the high oil price is certainly putting inflationary pressures into the market, also affecting food prices. We saw soft commodity prices rising. So those are, we're expecting the inflation number, CPI number, to probably peak above 6% in about July. And I see the SARB has got an estimated average inflation number for the year at 5.8%. So we don't see that changing significantly. And in terms of the monetary policy outlook, the Fed, so our local SARB was quite hawkish in the March MPC in the meeting, and they raised interest rates by the repo rate by 25 basis points. And given the inflationary pressures, we don't expect that to change. And we're probably expecting about 0.5% increase potentially in the May meeting, and that's obviously depending on oil prices, which we expect to remain at high levels.
And Tencent Holdings surged more than 5%, joining the rally by the rest of China's gaming industry. Talk to us about how those developments played out.
Yeah, so the Chinese tech sector, especially the gaming sector, had quite a strong rally, and Tencent followed that. Tencent having a big gaming component in its business, and this is on the back of regulators approving a number of online games. In fact, the first batch of approvals in the last 8 months. So it was an area that was under pressure, for new titles. Even though Tencent didn't benefit from any new approvals, I think it was more the sentiment around the regulation and the market just getting a bit more confidence that the regulator will approve games, albeit slowly.
Afrimat then, let's round up with them, because they've been talking about expectations of a profit that they say will likely increase by between 19 to 29%. That's in the year end to February. How significant is that?
Yeah, I think the market certainly expected it because of the strong commodity prices, because Afrimat's got a big exposure to iron ore through its iron ore mine. And the share price is in fact down slightly today, down 3% So even though it's a very good number, I think the market did expect it to a large degree. But yeah, it's certainly a solid earnings number with the earnings per share expected to be around 5.26 rand to 5.70 rand. So I think strong performance by the company.
Thank you very much for that, Karl. Always good to speak to you. Until next time, enjoy the rest of your day.
Pleasure.